when you're a trader or an investor, you got to be ready. You got to be looking at what the markets did into the weekend so that you're ready for Monday when the action comes. What levels are you ready to trade? That is key. All right.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Gareth Soloway dives into the latest updates on crypto and Bitcoin, sharing his expert insights and predictions for the market's future. Let's catch him up to know more.
Here we have the Dow Jones Industrial Average down 625 points, a walloping of 1.5%. The NASDAQ down over 1.5% or 300 points. And the S&P 500 down 75 points, a little bit less in terms of percentages, but still 1.25% drop. Now, oil surging to the upside, partially the strong U.S. jobs data, but in my opinion, I think it's more of a safe haven trade. I know it sounds weird, but when money's rotating out of big cap tech, and you can see over here, NVIDIA, Apple, Microsoft, Google. I mean, look at all this red on this board today. That money is being pulled out of a lot of these names, and it's looking for a home. Generally, when you're an institutional trader running a hedge fund, you don't want to be in cash. So you're looking and saying, okay, well, we're pulling money out of this. Now, where do we put it? And to me, one of the recipients here is oil, up about $2.29. We'll cover that chart in just a minute. Gold is also rallying, right? Safe haven asset. That's all you need to know is that gold is that safe haven. Interestingly enough, Bitcoin's bouncing today. Where is it bouncing? Off the 92,000 level that I've given you guys. That is your key support level, and it is getting a bounce today in spite of the risk-off trade. That's another interesting factor there. Taking a look at the S&P 500, this is the daily chart of the S&P. Again, S&P down right now 1.5%. Here we have that classic upsloping trend line. We'll show that. I'll zoom out in just a second and show that to you where that comes from. But again, there's been so many signals, guys. You can't say that I haven't been screaming at the top of my lungs to warn people that this was coming in January after the cycle date on December 15th. Here's a shoulder, here's a head, and here's your shoulder. Now, if you take that line and you draw that through, we have now breached the neckline of the head and shoulders pattern. That means it is now triggered. Doesn't mean it can't fail. Anything can fail at any point. It means that now probabilities favor continued downside. To do a measured move, you take that from there, drop that plumb line down to the neckline, and you take that distance and replicate it down. I believe I've done this before on my own and calculated out around 5,600 would be your price target for the S&P. And listen, we're already at 5,800, so it's not that far away. Just remember, folks, when we were heading up towards 6,000, remember my level, 6,000 to my high-end target was 6,100 on the S&P 500. And where did we hit right here? 6,100. Right to the dollar or to the point amount. That was also in conjunction. The cycle date was right here that we had. All of that right there telling us markets were going to be changing, a change in character. And certainly we have seen that change in character take hold. Now, the nice thing about cycles, they work both ways. So we do have new cycles that we're running. We're looking at where's that next cycle date so that could be a turn in the markets, potentially in the opposite direction. And we'll obviously keep you posted here at verifiedinvesting.com. All right, back to the chart. I promised you guys we'd look at the S&P chart here and zoom out. So a couple things to take note of. This trend line's pretty amazing here, going back to 2023. Touches right here, goes there, and that was also the top. And then obviously you guys know I've really harped on this because I think it's so powerful. But if we flip to the logarithmic chart and we go to the monthly and we go all the way back to the 1929 stock market high before the Great Depression and we put that through the dot-com high, look at where we topped. And this is why, listen, anytime you could get a 5-10% market correction at any point, right? So, I mean, that's always something that can happen, and it generally does once a year, every couple years. But what are the odds that it's something bigger at work here? And when you look at this chart and you go back to the Great Depression, just pre-Great Depression through the dot-com bubble, and you have literally now just touched that right there. I mean, look at this right there. That does tell you that there's a possibility it could be something more major.
Bitcoin analyst Willy Woo has cautioned traders to adopt a more careful stance in the coming months as risks in the crypto market appear to be peaking. Woo's analysis points to a high level of profit-taking and suggests that further corrections are likely before the market resets. While Bitcoin sentiment remains uber bullish, Wu advises market participants to proceed with caution, highlighting his local risk model, which reflects risk levels not seen since January 2023. Despite Wu's warning, other analysts remain optimistic. The Fear and Greed Index currently sits at a greed score of 69, indicating strong market appetite. Meanwhile, Bitcoin has retraced from its psychological $100,000 level, trading at $94,120 after a 3.92% decline over the past week. Some traders, like Rect Capital, see a high probability of reversal, noting that Bitcoin's recent 15% pullback aligns with historical patterns. Samson Moe echoed this sentiment, asserting that dips are manufactured to benefit large players.
NVIDIA today, big down day, 3%, another 3%, I should say. This reversal candle was everything right here. Again, that is one of the nastiest technical candles you're going to get right off double top, upsloping trend line right there, and a great reversal. You will find support around 132, though. If we hit that on Monday, that's going to be a big test for this stock. Speaking of Rigetti, down again today, trading now below $9. And again, my next level on Rigetti, not until about $7 Pierce. $7 Pierce, though, that will be a very intriguing level right down here. But again, I wouldn't be surprised if by Monday or Tuesday of next week, we tag that level. Let's get into Bitcoin here. Bitcoin actually showing some signs of life today. Now, where is it showing signs of life? It's showing signs of life right off of the key technical level that I've talked about, right? So again, I keep on letting you guys know, and I feel like a broken record sometimes, but I understand we have new people tuning in each and every time that I do these shows. But again, so many people were getting excited when we were rallying up, and I just kept on saying, guys, let's take it. Let's use logic. We know our level. This is resistance, so unless it gets above this line here, there's not a whole lot to do. Sure enough, it gets rejected. I said, okay, same thing. On the downside, being neither a bull nor a bear, just looking at the chart, what is the support? What is the resistance? Here's your support. Goes right there and gets a bounce. Now, at some point, either this will fail and price will shoot through it, or this will fail and price will shoot through it, right? But essentially, the idea is you don't want to jump the gun. Jumping the gun is an emotional response of guessing, and guessing generally gets us into trouble. So watch to see. We're still stuck here. For all we know, we're going to go up here. We're going to come here. I mean, we could do that. For all I know, eventually one of these will break. The question is, which direction does it go? Do I have any sort of inkling, and I've talked about this before, is that it's not a great pattern, but in general, you respect this reversal here to the downside. That's kind of what we would call like a flagpole, and this is kind of what we call a megaphone bearish pattern. So it's a slight bearish pattern, but it's not as good as a straight, like tight right angle, right? The tight right angles are the higher probability ones. This is just slightly favoring, so slightly would be 60-40, 55-30, 45 kind of thing versus, a tight right angle like that, that's probably an 80% success rate bear flag. And so depending on the formation, you have to understand that it does differentiate between probabilities of success on these different things.
Bitcoin is chasing $95,000 after rebounding from a dip below $92,000, sparking speculation that the worst of its recent downturn may be over. The 11% drop between January 7 and 9 led to the liquidation of over $257.5 million in leveraged positions, coinciding with profit-taking and macroeconomic uncertainty. Despite the pullback, several key on-chain metrics suggest that $92,000 may have marked a local bottom, presenting a potential buying opportunity. The spend-output profit ratio, SOPR, which tracks whether coins are being sold at a profit or loss, dropped to 0.98 on January 10, indicating short-term holders were selling at a loss. Historically, SOPR dips below 1 have preceded market recoveries, and investors are eyeing similar patterns now. Additionally, the entity-adjusted dormancy flow, a metric that identifies market bottoms, has fallen into its buy zone. Coupled with slowing long-term holder distribution, Bitcoin could be poised for a strong reversal toward new highs. Bitcoin recently dipped to $91,055, its lowest level since December 1, sparking fears of a potential drop below the psychological support level of $90,000. Despite these concerns, several factors suggest that Bitcoin may avoid such a decline. One key indicator, the Crypto Fear and Greed Index, dropped to 50, its lowest in 3 months, marking a shift from greed to neutral. Historically, similar dips in sentiment have preceded market reversals, signaling potential for upward momentum. Furthermore, Bitcoin has not yet triggered any of the traditional bull market peak indicators, according to data from CoinGlass. These metrics, which have historically signaled market tops, remain untouched, implying that the broader bullish cycle may still have room to run. Crypto analyst Mikey Bull views recent dips as buying opportunities, suggesting a potential rally lies ahead. Institutional investors seem to share this optimism. Since December, large holders have accumulated over 34,000 BTC, worth $3.2 billion, signaling strong demand despite short-term volatility. Car Oliveira of Blocktrends noted that institutional players are using this consolidation phase to strategically accumulate. Lastly, rumors of a $6.5 billion BTC sale by the U.S. government seem unlikely, especially with President-elect Donald Trump signaling plans for a Bitcoin reserve. These dynamics support a possible V-shaped recovery, keeping Bitcoin above $90,000. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoinzilla for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.